Hi, friends. Simon here from InformedTrades.com. Today is Tuesday, August 19th, 2014. Time for our daily Forex chart review. Basically, in these sessions each day, I share the trades I'm placing, adjustments to existing positions that I have on in the markets, all as a part of helping traders learn. These are live trades placed on real accounts. You can see my entire trading history documents on my blog on Informed Trades, and all the trades are verified by myfxbook.com, a trade verification service. If any information I'm presenting is unfamiliar to you, check out the learning section on informedtrades.com. We have a huge archive of learning material covering not only my approach to trading, price action swing trading, the Forex market, many other styles, many other markets. Check it out, share your knowledge, ask questions. We can all learn together. Let's get started with a look at the charts. First chart, as is customary, is a look at gold. Okay. So not much new here. We are now below the 50 simple moving average and the 200 exponential moving average. One could argue that this is a bearish sign. The momentum is downward. I would agree to the extent that I think 1280 is still a reasonable target. We do have, in terms of, there's just a lot of congestion here. One could argue that there is support at 1293. We saw that from the long wick on August 15th, and also we have a little bit of a trading range here. We also saw a bounce off here July 16th, but this trading range that really tops out or shows some significant response to 1293, and that range goes back to late May. However, this level, I'm just going to delete the, oh, that wasn't what I meant to do. Well, I'll fix this later. Let me see, add the rectangle in. These charts from tradingview.com. But I think the main range that I'm focused on is the rectangle. And one could argue that it's basically something like this. We broke out of it a little bit here. Some may extend it further up above. But, here was tested. Here was the top was established and the bottom was established here, here. And the bottom is probably a little bit higher actually. Go right there maybe. So this is basically a range 1270 to 1330. That's the main range I'm focused on. I am accumulating now. I think it's a great time to buy if you're willing to hold for several years. If I expect a bullish break out of this range. We've been in this range for quite some time, since at least March. But I think we're getting ready to head higher. And I've talked a bunch about that, especially the performance of gold stocks is, to me, signaling that we're moving higher. But we'll see. If you do believe it's going to head higher over the next few years, it could be an interesting time to buy. In terms of a trading range, this wouldn't strike me as a real opportunity, but let's see if price can go to 1280 or 1330. I think those are compelling opportunities for range traders. Okay, now moving on to Bitcoin. As we've discussed, the trend is definitely down, bearish for Bitcoin. Have we found support? Let's zoom out a little bit, because we do have these two candles here, long wick, back-to-back days. That's interesting. But is there anything? Is there a support level that would justify that? Let's switch to the weekly chart. And not really. I wouldn't really say we're at a meaningful support level. If we can go back to here, actually, I'll add that on the chart. For right here, maybe, that's obviously a meaningful level. 362. Is that where we're headed? I don't know. We'll see. I do think the trend is bearish. So, personally, well, I am long. Personally, I'm long. I got long right around 522, a little higher than that. So this position is out of the money for me. However, I'm not really trading this. Like I mentioned, I view this as a bit of a lottery ticket, an educated lottery ticket is what I like to call it. I'm risking the small amount of capital entirely that I put in, and I'm holding out for a 10 times return. So basically a Bitcoin price of 5,300, a little over 5,200. In terms of a trading mentality or from a trader's perspective, we are clearly in a downtrend. I would look to short or any rallies here, especially a rally to 560. I think it's a great level to short at. We have the 200 exponential moving average there. We have a resistance level that was naturally established July 30th. Again, here June 24th, here mid-June. So I think it'd be a really interesting level if price can rally there. But we'll see. At least for now, the trend is definitely bearish. This could be, candlesticks could be suggesting a reversal here, but I really wouldn't put too much stock in it just yet, because I'd like to see, a trading range form perhaps, or some kind of sign that this is actually a meaningful support or resistance level. The market hasn't really established that before. Okay, so that's Bitcoin. On to the Forex trades. I have 3 Forex trades on at the moment. I did not place any new trades today. So 3rd day in a row without any new orders placed. That's perfectly fine. It's not about volume of trading, but just finding trades that you are comfortable with that meet your criteria. And one of the things I've been working on actually this year is filtering out trading ideas, filtering out bad trades I shouldn't have entered in the first place, with the goal of increasing my win rate. That hasn't really worked yet, but I think I'm on the right track, and I hope by the end of the year I'll start seeing some positive results, where fewer trades results in a higher win rate and cutting out some of those losses. Okay, Euro Kiwi. We are, I'm short from this black line here, so this trade is currently in the money. It did spike up to test it, but got quickly pushed back down. So that tells us that there are some bears here defending this level. If price can go up quickly and the bears come in to quickly push it back down, and the result from a candlestick pattern is a long wick like this, that tells me that we have some bears that are defending this level. This level here is also a bearish checkmate, or it's continuing to validate that, which means we're not going to break past this high, or at least that's sort of the idea behind this trade. And I think there was some confirmation of that when the bears came in and defended 58.21, which is the level I entered at. So no real adjustments to be made yet. However, if we move to 56.76, if we can get below that level, at or below that level, close there, then I will move my stop from 59.21 down to my entry point at 58.21. At this point, though, the trade has not been de-risked, so if the market spikes back up to 59.21, I'll be taken out for a bit of a loss. So I haven't moved my stop yet. Target is, of course, 54.03. Just basically sitting tight on this trade. Kiwi Yen. Okay, so long Kiwi Yen. This is being short Euro Kiwi and long Kiwi Yen is, in both instances, you're basically speculating on an appreciation in the New Zealand dollar. Here I'm speculating on appreciation against the yen, and I like what I'm seeing so far. That we did see a bit of weakness in New Zealand dollar today over the past 24 hours, but that's quickly been bought up. So we are seeing New Zealand dollar being defended. We are seeing Kiwi bulls stepping in. Euro bears or Kiwi bulls or yen bears or Kiwi bulls, however you want to look at it. Elements of both probably. So that's encouraging. Like Euro Kiwi, this trade has not been de-risked, so I'm still waiting for price to clear 87.26. Then I can move my stop from 85.45 up 85 pips to 86.30. So far so good on this trade, and I do expect this candlestick here, this long wick candlestick here from August 8th, to serve as a bullish checkmate. So I don't expect the low of this to be breached, and that's sort of the rationale behind where the stop was placed. If this low is breached, that shows the trade is wrong, so I have to accept being stopped out there. A good place to put the stop. Wherever you believe you're wrong, or where the trade thesis is disproven, that's a good place to put your stop. So, like Euro Kiwi, with my Kiwi Yen trade, I'm just sitting tight, waiting for a further rally so I can move my stop to break even. Canada Swiss, the third and final trade that I have on at the moment. This one is a little more problematic. It is, for one, it is out of the money. Let's zoom in a little more. Oh, okay, there we go. Now you can see that it's above where I entered. I would really like to see. Now we saw the good news is we saw the 50 simple and 200 exponential moving average right there. So the market needs to clear both those levels to get to my stop at 83.58. However, it's a little. The price action over the past couple days is a little disturbing, mainly because we had a strong up candle yesterday, and we still have so far a pattern of higher lows over the past 3 candles, right? So this low is higher than this one, and this low is higher than this one. That's a little discouraging. If we close above this black line today, I would be even more discouraged. I think it's useful to see price head back down. I think so. That's we'll see where price closes today. That'll definitely be something to watch. Not making any adjustments. My stop is still at 83.58. Let's take a look at the 4-hour chart, though. Okay. So that's a little encouraging. I'm just going to put this line here. Okay. So long as price stays below 83.28, I think that's good. That's encouraging. Maybe price, if it rallies up there, that can bring out the bears to defend that level. So that's definitely something I'll be watching for. But that's about it on this trade. It is the most problematic of the ones that I'm in at the moment, mainly because it's out of the money and it has the risk of closing above 83.18, which is a major resistance level. If it can close above that level, that really suggests that the bulls may have some momentum on this trade. And that's about it for my trades today. As I mentioned, I didn't put on any new orders. Haven't put on any new orders for the past 3 trading sessions. Just not seeing any opportunity. So I think it's really one major lesson is to not force trades, right? If the opportunity isn't there, then there is no harm in waiting. Wait for the opportunities that you like, that meet your criteria. Be fairly stringent in what you're looking for. And I've learned the hard way. That's a good rule to follow for improving your win rate, rather than over aggressively trading, chasing trades, and making mistakes that way. That's about it for my trading for today. Any questions you have, anything you want to add, join us at informedtrades.com. Best of luck in your trading, and we'll see you tomorrow. Take care.